Let us see the next question. A factoring firm has credit sales of rupees 360 lakhs. So 360 lakhs is the annual credit sales. Its average collection period is 3030 days. So the collection period or the credit period is 30 days. The financial controller estimates bad debts losses are around 2% of the credit sales. So loss on account of bad debts is 2%. The firm spends 1,40,000 annually on debtors administration. So there is an annual collection cost 1,40,000. This cost comprises of telephonic and fax bill along with salary of the staff members. These are avoidable costs. So very good clarification is made that say this collection cost 1,40,000 that say we are incurring right now, so that will not be incurred in future once you appoint a factor. A factoring firm has offered to buy the firm's receivable. The factor will charge 1% commission and will pay an advance against receivable on an interest at the rate of 15% per annum after withholding 10% as a reserve. So 10% is the factor reserve. And the factor will give loan at the rate of 15%. What should the firm do? That is the question. Assume that say, there are 360 days in a year. I request all of you to go through the question, please. So now friends, over here, we have been provided with the information in which we are required to decide whether to appoint the factor or not. Again, certain information are missing. The first information which is missing is that what will be the sales once you appoint the factor. In absence of information, we assume it to be same, that is 360 lakhs. No information is provided for the collection period once you appoint the factor. So we make an assumption it is going to remain same 30 days. Regarding the collection cost, there is an absolute clarity provided to us that it will not be incurred in future. That is what they have provided. Then bad debts is given to us. It is 2%. No clarification is made in the question that whether it is recourse or non-recourse. So of course in that case we'll assume that it is non-recourse. So once you appoint the factor, it will be 0. The factor will charge 1% commission for collection services. 15% is the rate of interest at which say they will give loan to us, and factor reserve is provided as 10%. It is a kind of bank margin. Taking 1 year is equal to 360 days, we are required to make calculation of answer. Again friends, we can see that the sales value is same with in-house management of the receivable and even after appointment of the factor. That is the reason we will adopt the total relevant cost approach for decision making. So write down heading total relevant cost approach for decision making. Let us understand, let's say, how to do answer. I request all of you to write down answer along with me. Step number 1, calculation of debtors. In bracket I am writing after appointment of factor. It will be calculated as annual credit sales divided by 360 days into average collection period. So 360 lakhs divided by 360 days multiplied with average collection period, that is 30 days. So 1 lakh into 30, that comes to 30 lakhs. So this is the way the amount of the debtors will be calculated after appointment of factor. Step number 2, calculation of amount of advance by factor to company. Let us see that say how to calculate the same. First of all, I request you to put the answer for this working on it, that is say in the chat box, and then I will do working for you. So we'll make the calculation like this. Particulars amount. We will start preparing the working note, taking the debtors into account. Because debtors is the gross amount for which the investment is blocked in the business. That is an amount of 30 lakhs. Less factor reserve. What is the percentage of the factor reserve? It is provided to us as 10%. So in that case, we understand it is 30 lakhs into 10%, that comes to 3 lakhs. Less factoring commission. We assume that the factor will charge the factoring commission in advance. That is at the rate of 1%. So it is 30 lakhs into 1%. That comes to 30,000 rupees. Or otherwise, we can compute the answer in this way. 360 lakhs into 1% into 30 divided by 360. Whatever the commission to be charged in the entire year, out of that, for the first 1 month, it will be collected in advance. Now we'll find the amount on which interest is calculated. 30 minus 3, 27, 27 minus 30, that comes to 26 lakh 70,000. Less interest collected in advance. 26 lakh 70,000 into rate of interest is 15%, into 30 divided by 360. This is the way we understand that so the amount of the interest is collected in advance. 26 lakh 70,000 into 15%. That comes to 4 lakh 500 into 1 divided by 12. That is 30 divided by 360. 33,375. So difference of these two is amount advanced. So it is calculated as 26 lakhs 36,625. This is the way advance amount is calculated. So this is the way step number 2 advance amount is calculated. Step number 3, calculation of total cost for in-house management of receivable and for factoring services. So we are required to make the computation of the total cost for both the options. The first one is in-house management of receivable. And the second alternative is appointment of the factor. Dear students, over here, all of you must have observed one important point, that the question is not providing the information about the cost of capital of the company. That information is missing. This is a question from the institute publication in which they have considered that, say, if at all we do not have the information about the cost of capital of the company, let us ignore calculation of the carrying cost. And accordingly, they have provided suggested answer. I request you to do answer for in-house management of the receivable and put your answer in the chat box. So in case of in-house management of the receivable, we will be having first of all bad debts. We have been provided that's the 2% of the customer's default. So 360 lakhs into 2%, it is 7,20,000. Then there is an annual collection cost of 1,40,000. This is the way the total cost can be calculated. If you appoint the factor, you will be having like the factoring commission charge at the rate of 1%. Factoring commission, it is 360 lakhs into 1%. That is 3,60,000. Next is interest payment to factor. That is 26,70,000 into 15%. It comes to 4,500,000. That is the way we will have the total cost. Collection cost information is specifically given, it will not be incurred later on. For bad debts, we have an assumption that it is non-recourse. This is the way we will compute the total cost. Total cost is 8,60,000. Then it is 7,60,500. The option which is having so the lower total cost will be selected. That is what we understand is the appointment of the factor. Please take your answer. So we advise the company that you should appoint a factor. So write down final answer. The company should appoint factor. That is the way we have the decision. So again a small revision of the entire answer. First of all, friends, we understand that the question is not providing the information about the revised sales, we have assumed to be same. Revised collection period, we have assumed to be same. Bad debts, we have assumed to be non-recourse. These three are the assumptions that we have made. Since the sales value is same, so we are adopting the total relevant cost approach for decision making. So step number 1, calculation of the debtors once you appoint the factor, that is 30 lakhs. Second, calculation of the amount of the advance by the factor to the company, in which debtors minus factor reserve minus factoring commission. Then we get the amount on which the interest is calculated and collection of the interest in also in advance. Importantly, remember that say in step number 2, the computation is made using the debtors value as a base. So 30 days is the time period for which the entire calculation will be made. Why? Because the funds of the company is remaining blocked equal to the credit period 30 days. Again, the assumption that we understand is the interest and the commission will be collected in advance. Third step is the calculation of the total cost for in-house and for factoring services. Importantly, in the question, the discounting rate cost of capital information is not given. So, as per institute suggested answer, we are ignoring the calculation of carrying cost. For in-house, the total cost is consisting of the bad debts and collection cost. Once you appoint the factor, there will be cost in respect of the factoring commission and interest payment. Total of that cost is lower than the present cost, so the company is advised to appoint the factor. This is the way we take the decision.